What's going on, everyone? About 74% of stocks in the S&P 500 closed up in the green today, and we have a handful of stocks at some great levels right now. The uptrend that we've been constantly talking about with gold prices is powering higher, and gold actually made brand new record highs today. So, of course, we're going to dive deep into this, but we also have a handful of other charts and insights that you'll definitely want to know about heading into the market for tomorrow. And honestly, over these next couple of weeks, some of this information is stuff you will not find anywhere else. But either way, we have one more day left for the week, so let's end it on a great note.
Yeah, the SPY was fantastic today, up 0.84%, continuing off that great price action from yesterday. But hey, let's go. You know, these tech stocks are continuing in a great way. I know the bulls loved it today. Nvidia pretty much powered higher all day long. There was little pullbacks mixed in, but to end the day up 1.9%, pretty respectable for them. Microsoft was higher, as well as many other tech stocks. Even Amazon was trying to power up today. So we saw a great explosion out of many stocks. And Mike, I know you mentioned gold hitting new all-time highs. This is just so significant right now. It shows that there's a lot of fear maybe creeping into the market. People obviously are a little bit worried about prices at the time, and I think people are starting to hedge their bets a little bit, you know, getting into a more of a safe haven asset like gold.
Absolutely. When you have gold make brand new record highs, it definitely says something about how people are feeling about the economy and what they are doing with their money. Essentially, what we've seen in the past, especially in recent history, is when the Federal Reserve started to cut interest rates, that has helped gold tremendously. On the chart, we can see two lines, one blue, one gold/yellow. The blue line represents the interest rate from the Federal Reserve, and that is set to come down quite a bit going forward, actually starting next week. As we look at important rate cut events throughout recent history, whether in 2020 or 2008 or, even in 2001 or so, every time rate cuts have happened, that has benefited gold in a very nice way for multiple reasons. But the main thing we are seeing right now is people are realizing, wait a second, rate cuts are starting next week, so let me position early into this. And we've seen gold uptrend in a strong way, not only in the short term, but even over the medium term. But either way, a lot of money is actively flowing into gold right now, and for multiple reasons. One of the main ones being that the, I guess you could say, economic situation certainly isn't the best, especially when it comes to the United States financial budget and everything associated with that. As we can see, we broke a brand new record today as interest payments on the national debt just topped $1 trillion. So great stuff there, right? No, absolutely not. It's horrible. But either way, interest payments on the national debt are skyrocketing quicker than almost anything else. And when you have a situation like this, it definitely poses more risk with inflation over the long term, among many other problems. Either way, gold has been a historical safe haven to protect against those situations. So for multiple reasons, a lot of money's flowing into gold right now. We've been talking about this uptrend for a while now. Gold prices are at 25, like almost, they're getting closer to $2,600 an ounce, which is great to see. GLD is a great way to follow and trade gold prices on like a short-term basis, and definitely keep this close on watch because it's starting to move in a pretty exciting way.
Yeah, it was up 1.76% today, and I really like trading GLD, Mike. You know, I know some people are like, oh, man, it's a gold stock. You know, it probably moves slow, right? Well, whenever you have 1.76% days, whenever your average percent rise is only 0.56%, the options tend to pop off quite a bit. There was actually some options like the 237.50 strike calls for gold, which popped up by 900%. The 235 strike calls popped up by 800%. And then there were a bunch of like couple 100%ers also around that area. So, you know, we're seeing some pretty good price action out of gold. And Mike, even silver's moving pretty well in the short term too. I know that it's not making a brand new high and it doesn't have that fun headline to go along with it, right? But this is another one that's moving a lot in the short term, up 4.4% today. That's no joke for this metal either.
Yeah, and a lot of our, I guess you could say, regular viewers know that we've been talking about gold in a very bullish way, not only over the past couple of months, but even throughout this past week. We've touched on gold multiple times this week, waiting for this breakout, and that's exactly what happened. So it was definitely a good day for many people out there, but we'll talk more about gold as the video progresses with specific levels and other specific ways to go about following the setup going forward. But another thing we have to talk about right now is how strikingly similar the stock market has been this year compared to its performance last year. So take from this what you will, but basically we could see the performance of 2024 and 2023 are like almost identical. Of course, there have been certain parts throughout the year that differed from 2023, but it has been very, very similar in multiple different ways. And as we could see, we are heading into that time of the year where the market not only falls on average, which is September and even October, before an election year especially, but also in 2023, the market definitely struggled around this time. So again, take from this what you will, but I thought it was somewhat interesting.
Yeah, and we always like to look at the historical data, right? And we've seen a lot of different times throughout this year where the historical data has played out to be very similar to last year, right? And even some of these other years, like the election years and etc. So, like Mike said, take for this as you will, but I will say I'm definitely keeping it in the back of my mind. And we still have to realize that while SPY is recovering up a lot in the short term, the market has been shifting a little bit still over these past couple months. And, we still have that big all-time high around 565 to break. Hopefully we can break that sooner rather than later, because I don't want to see any more chop up here, Mike. Like if we chop around 565 again, I'm going to get pretty sad because this price action has been pretty fun the past couple weeks, honestly.
Absolutely. And then another thing to keep in mind is that as we, I guess you could say, head into this time of the year, there are also some, I guess you could say, very powerful but not as popular things that are influencing the market. Essentially, what we could see on this chart is the amount of estimated corporate buybacks. And essentially what this is how much money is getting just like plowed into the market to buy stocks, right? And as you might expect, this definitely has a positive influence on the market as a whole. What's very interesting is that essentially, when you get to the end of a quarter, like we have at the end of September, 2 weeks before that is basically like a corporate buyback blackout policy, which is when buybacks get restricted. So basically, starting next week, there's going to be a lot less buybacks happening, and that is going to last all the way until a lot of companies report earnings, which will be at the end of October. So essentially, from starting next week to, a couple weeks down the line, we're going to see a lot less, buying pressure constantly reinforcing the market, which will only make it easier for the market to fall, in addition to the election fears and bearish seasonality. So again, we like to point data out like this ahead of time, just so everyone can be aware of it. Again, this starts next week.
Yeah, that's pretty crazy, Mike. I mean, corporate buybacks have been in focus a ton over the past few years, and I would say like the past 5 to 7 years, honestly. We've been seeing so many big headlines because the buybacks are getting kind of crazy, right? And a lot of people argue that like the buybacks are kind of what holds up the market, especially during some of these, weirder times like this, where like a lot of people might say that the economy is a little bit worse. But it'll be very interesting to see what happens, Mike. There's a lot of theories around the buybacks and etc. But whenever I think about buybacks and, them decreasing, that's definitely not the best sign. Of course, that happens right when we head into September, right? And a lot of people always go, well, hey, why is September historically one of the worst months? Maybe this is why. It just so happens to line up perfectly.
Yeah, there's definitely a lot of factors happening all at once, but definitely keep this in mind going forward. But another thing that's worth keeping in mind is some of the earnings action that is wrapping up this week. Adobe reported earnings in after hours today, and it's looking pretty rough. So whenever you have, like, let's say a big tech stock stock like Adobe have a giant red candle like this, it's certainly not the end of the world, but it's certainly not something that you want to see either. So we definitely wanted to point this out, but also keep in mind that we do have some economic data set to release tomorrow as well. Basically, looking at the schedule, we have consumer sentiment data set to come out 30 minutes after the market opens. Realistically, this isn't the most mind-blowing economic data report that we'll see, but from time to time, it can move the market. So again, keep this on your radar heading into tomorrow. But Tom, looking at SPY right now, like you said, it is at a crucial level. There's some serious resistance overhead. It has been pretty strong in the short term. So what would you say are some of the key levels to keep in mind going into tomorrow?
Yeah, first things first, we got pretty close to that 560 resistance today, but the high was right around that 559.35 area. I'll say this, anywhere between 559 to 560 could act as a pretty major resistance. We've seen a lot of bounces right around that area. Today, I was waiting for 557 to break, and we saw a pretty good breakout above that. So, the SPY's been breaking these bigger levels quite a bit, but 560 will be on watch. After 560, 562 is pretty major above there. And then past that, we're pretty clear to the all-time high, which is right around 565. So that's what I'm watching to the upside. If we do end up falling back down, there's going to be a lot of levels from today and yesterday to look out for, like 555, 553, and 550 if we do end up getting there. But Mike, the market's been swinging a lot lately. It's been volatile in both directions. I'm curious if we can test that high or not tomorrow.
Yeah, and then like another thing that I thought has been very interesting is as we look at SPY, it has been making lower highs in a pretty strong way, and that is just like another area of resistance to like keep on watch. For example, we could see like towards the middle of July, SPY topped out around 565, and that was like the major high. Then later in you could say the end of August or so, it made another, I don't want to say high, but it made a lower high right around like 564, we'll say. And again, that shows weakness as it's a lower high. Now SPY is sitting right around like 559, and the next question is like, all right, like where is this next lower high going to be? And if SPY actually breaks through, let's say the 564 area, that will be extremely, extremely good. But the main question is, can it break 564 and stop this pattern of lower highs? I don't think that's going to happen, but we'll see what SPY can do.
Yeah, I mean, it's been trying to power back up here in the short term. 560 is going to be big for tomorrow. I don't really think that we'll break out above there by the end of this week. But, Mike, I will say next week there's some pretty big stuff on the horizon. We're going to actually get an FOMC interest rate decision on Wednesday of next week, September 18th. So be ready for that. We're going to be having this decision come literally as the SPY is testing these highs. So I'll say this, though, Mike, for tomorrow, 560 is going to be a big spot. If we can't break that early in the morning, definitely be adaptable in the short term.
I'm excited. We have an interest rate decision next week, crucial resistance overhead, coming into an election, crucial seasonality, gold prices popping, and a lot of stocks setting up in some pretty exciting ways. So it is a great time to be a trader. I think we're set for an awesome next couple of weeks. But with that being said, let's jump right into some setups and predictions. With the first one, you guys already know GLD is on my radar. I've been talking about this one nonstop this week. It is continuing to show just strength in a bullish way, which is great to see. There's a lot of root reasons for gold prices to be moving like they are right now, especially with rate cuts coming. But basically, GLD is definitely on my bullish radar going forward. While I am bullish on GLD, understand that gold moves in a way that is different than, let's say, Nvidia or Tesla or most other like popular stocks out there. The price of gold tends to move in a relatively slower and more consistent way, and it's not going to have like giant, up or down days of 10% like we might see with Nvidia. So just keep that in mind. It's more something that like trends over the course of a couple of weeks. So it's definitely on my bullish radar, but again, keep in mind the way in which it moves.
Yeah, sometimes gold can get kind of choppy, but it'll still be on that overall uptrend, right? And I really like it for swings and stuff. But with my first play, I'm looking at SQ to the upside. We talked about this one a little bit yesterday. It just never really got above this key 64 resistance. So I'm watching it again. I love the way how it closed right at that resistance. So if I see a break of 64, I'll be watching Square back up. And if we go to the daily chart, Square's starting to bounce off a pretty big support in the short term. So that's another big reason for watching it back to the upside.
Sounds great. All right, another stock I'm watching pretty closely is CVS, and it is to the upside. CVS was actually yesterday's big money play, and it had a great green day today. I really like the setup on this one. I think it's respecting the $56 support in a pretty good way, and the price action has been pretty good intraday. At the same time, CVS moves in a way that is a little bit different than, I guess you could say most stocks in the market right now, especially big tech stocks. We could see in the bottom right corner of the screen, the correlation to SPY is not that strong, which I think is a good thing in this market. So with that being said, CVS is definitely on my bullish radar.
Yeah, it looks pretty good in the short term. I love how it's bouncing off that support. I know a lot of the people who bought into the big money play are definitely happy about that today, especially with that short-term expiration. It's been doing fantastic. With my next play, I'm looking at Microsoft. There's actually some pretty big levels here in the short term that I wanted to point out on the daily chart first with Microsoft. So you can see here in the short term, this 427 to 428 area is a pretty major resistance. We had a bounce here and a bounce back on the 1st of August. So it's been pretty much stuck under this level, Mike, and we're testing that resistance once again. So going over to the Bookmap, you can see 428 is major here in the short term, along with 427. If we see a 428 breakout tomorrow, I'll be targeting at Microsoft to the upside towards 430. 430 is going to be a good target because you can see that is a major resistance where a lot of sellers are stacked. So just have your eyes on 430 if we do get that breakout. And overall, Mike, Microsoft had a great move today, and if the market keeps pushing tomorrow, we should be able to break that resistance.
430 looks like a brick wall. 56,000 sellers are lined up there, and it's definitely going to be a crucial level. So definitely keep this level on watch with Microsoft. But besides that, Tom, we are all set for today's momentum plays. And with the first one, we have PENN, PENN, to the upside.
Yeah, Penn was up 4% today, moving pretty well over the past couple days. If they're able to break above the high of day today, right around 1855, then watch them up.
All right, with the next one, we have ExxonMobil, also to the upside.
Yeah, Zom's been powering higher here with oil in the short term. If Zom can break back above 111.50, then watch Zom up as well.
All right, and then with the last one, we have Disney, also to the upside.
Yeah, Disney's doing pretty well in the short term, is also off of support. If they're able to break this little double top today around 89.30, then keep watching them up. They were up around 1.11% today.
All right, so we have Disney, ExxonMobil, and Penn on watch for potential momentum plays for tomorrow, if and only if they break through the levels Tom listed. Essentially, we are looking for breakouts here where the stronger and more consistent these stocks move, the better these setups become. But if the levels do not break, do not force the setups, we're looking for strong momentum here. So definitely keep them close on watch. But besides that, we are all clear for today's $860,000 big money trade, and we are looking at ticker symbol KR. So this is Kroger. It's certainly not as exciting as Nvidia or any tech-related stock, but this is a pretty interesting big money play. Essentially, the big money bought the 55 strike call options that expire on April 17th of 2025. At the same time, this is a pretty big money play coming in around like 860,000. It's not like the craziest ever, but definitely respectable. And essentially, these call options are right at the money. They have more than enough time to them, a very good amount of time to them. And Kroger is a company that is like relatively recession resistant, and as we head into these coming months, that is certainly a good trait to have in a company. But anyways, basically KR had a great day today off earnings, and it has some resistance overhead at 55 and then like 56. These have been like key like areas, so just keep that in mind. I know it's slightly above 55 right now, but it's just like an important resistance area. Assuming that it can break through these levels in like a strong momentum filled way, I would not be surprised to see a retest of like the recent high of like $58.34. So that's nice to see. But at the same time, if this stock broke back below like the $53 area, that would definitely be a warning sign in my book.
Yeah, I actually like 53 there as well. There's a couple of hits just above there. So, that would be a pretty decent support in my opinion. But I really like these resistances here in the short term, Mike, like 55, which is starting to break. If we see another good move tomorrow, that'll be a great start to this big money play. And just keep in mind, guys, there's a lot of time to this one. Kroger has been kind of playing out in a weird way on the daily chart lately, Mike. It's been consolidating quite a bit here. And whenever you zoom out, it's almost like there's a lower high, but at the same time, I think that we're in like a different type of pattern on this uptrend, and we might be towards the end, like where we're going to be getting that good break to where, or that good test of that recent high and then possible break out of it. So I love the play with KR. I love how it bounced off that support recently around $50 as well, and even posted the higher low in the shorter term right there, which is a good sign. You can tell overall here over the past few months or throughout 2024, Kroger's been on a pretty good uptrend.
No doubt. And today was a very great day, especially for a company like Kroger. When it moves up by 7% in a day, that says a lot. And Kroger is a company that you don't see move like this too often. So either way, definitely keep it on watch going forward. But before we move further into the video, we have to give a giant shout out to today's member of the day, Lawrence, in the StockedUp Discord, who crushed it today with some SPY call options. We could see he definitely had a great day there, and he's been a member of the community for almost 2 years now. So huge shout out to you, Lawrence. Keep up the great work going forward. If you guys are into short-term trading, definitely make sure to check out the first link in the description in the comments down below to get access to some custom technology that we've been developing for years now. Basically, we have an army of custom options trading bots that showcase the options that are moving in the strongest way every single minute throughout the day, as well as a handful of other ones that are definitely get the job done in a pretty nice way. We could see, looking at today's SM bot recap, we had some coin call options that popped up by 414%, Tesla call options that popped up by 352%, Microsoft call options that popped up by 318%, APP call options that popped up by 248%, Amazon call options that popped up by 221%, and more than that. So this is just one of our many bots. You would also get access to our big money plays on the same day that they are posted. Also, our live events. You could chat with Tom and myself all day long, and you essentially get everything you could possibly need for short-term trading. It's awesome. So if you want in, it'll be that first link in the description and the comments down below. But Tom, I'm super excited for the market tomorrow. We're seeing some great moves in multiple different ways with multiple different stocks and multiple different areas of the market. So it's a great time to be a trader.
Yeah, it definitely is. So guys, heading into tomorrow, just keep in mind, just because the past couple days were bullish doesn't mean that tomorrow's going to also be bullish, right? Just keep in mind, we're at some pretty big resistance on the SPY at 560. And then, of course, we're pretty close to the all-time high at 565. But hey, if we do see a good breakout tomorrow morning, don't be afraid to follow it up, at the same time, right? Be adaptable out there. I get it. For the longer term, generally, you're a bull, right? But in the short term, anything can happen, so continue to be adaptable. And I can't wait for next week, Mike, with that FOMC meeting coming out. We've been waiting for this for a long time.
And there's set to be a lot of great opportunities over the next couple of weeks and months, especially with the election. So let's remember to trade in a smart, disciplined way so those opportunities can be fully capitalized off of. One key component is like risk management. So having a stop loss, and even more importantly, respecting that stop loss, is something that is absolutely critical for any and every trade that you take. So definitely make sure risk management and stop losses are one of your biggest priorities. Following the money is also beneficial, and just trading in a way that is adaptable and flows with the market. Those are all crucial things. So definitely make sure that is taken care of. Again, if you guys want to get into the Stocked Up trading floor, the link will be in the description and the comments down below. But besides that, thank you all so much for watching, and let's have a great end to the week.